You buy Bitcoin, you hold it for more than 4 years, Joe. That's my advice to everybody.
Fair to say you simply flooded the system with money?
Yes, we did. That's another way to think about it.
Where does it come from? Do you just print it?
We print it digitally.
I'm very bullish on the long-term viability of Bitcoin.
I was going to say, did that surprise you?
That surprised me how much that's
Really?
gone up.
Hey, Internet. Welcome to another episode of the Acropolis New Foundations podcast. Acropolis is the Bitcoin treasury platform for businesses built on multi-institution custody. I'm in the studio today with Wyatt O'Rourke. He's the founder at Basilic Financial, the chief marketing officer at The Space, and author of The Bitcoinization of Finance, which came out in May. And also with us in studio is Jordan Guess. He's the owner at Trusted Advisors CPA and co-founder at Bitment. And both of these gentlemen just co-hosted the much talked about Bitcoin Financial Services Summit at The Space, where Wyatt is chief marketing officer in Denver, Colorado. And because I was not able to make it this year, instead, I've done the second best and invited them onto the show to steal any takeaways that I can get and to have obviously a terrific conversation about why Bitcoin Financial Services the best industry to be in right now. So gentlemen, thanks for joining me.
Thank you for having us.
So I wanted to start with just kind of the breaking news of the week. I don't think that this news had broke while you all were still at the summit. So this is kind of post-summit. But this week, JP Morgan announced that they will be allowing Bitcoin and Ether to be used as collateral for Bitcoin and Ether lending, Bitcoin-backed loans. This is interesting because, as we know in the space, and maybe outsiders aren't as aware, but JP Morgan CEO Jamie Dimon has been one of the most outspoken Bitcoin haters. And yet here we are, JP Morgan is now treating Bitcoin as the pristine collateral that we know it to be. So my first question, just to kind of get the ball rolling, is whether or not you all see Bitcoin as the Trojan horse that is infiltrating TradFi, or is TradFi to some degree infiltrating Bitcoin? Is a little bit of both? How do you see that playing out?
I would say, go ahead. You go ahead, Wyatt.
I do think it's a little bit of both. And we talked about this in the Bitcoinization of finance, where I think, hyper Bitcoinization only happens using, the finance industry. Bitcoiners get really jagged about the finance industry. And that was like a big precipice for me writing the book. It's like, hey guys, this isn't all bad. I'm certainly, not going to defend the finance industry at large, a lot of shenanigans, there, but I really frame it in the context of every industry is susceptible to fiatness, and, finance is kind of simply the business of money. So it's particularly susceptible. But I think what we're seeing, and, big reason why we're really excited about Bitcoin financial services as a sub-industry, is we have this traditional finance playbook. Bonds aren't a new concept, options aren't a new concept, futures aren't a new concept. We're just now seeing that applied to Bitcoin, which is particularly exciting because we don't need to recreate the wheel. So, I think high level, I'm particularly bullish on Bitcoin collateralized lending. That's funny they're accepting Ether because, as you mentioned, Chase, Bitcoin is pristine collateral, and you can't say the same, about ETH. So we'll see how that plays out for them. Credit markets are particularly important, plumbing to the underlying, financial system. Obviously, much larger than equities, even though, equities are kind of like the sexy topic, especially, with the treasury companies. A lot of people are more, at least Bitcoiners are more in tune to equity markets. But what I think, long term, this really does is, as more servicers and lenders come into the space, we're going to see the interest rate charged on Bitcoin collateralized loans. I think that will kind of become the new risk-free rate. And as market participants ourselves, that will kind of serve as a benchmark for how volatile or risky the overall market perceives Bitcoin. So the deepening of Bitcoin capital markets is a good thing, and we should encourage that. I think that's like the most useful and gradual kind of progression to a hyper Bitcoinized world is through traditional financial products. I think this is a great step in that direction.
Yeah, I would just add that Jamie actually reached out to Wyatt and I to see if he could make this announcement at the Bitcoin for Financial Services Summit. but strictly no shitcoiners were allowed at the event, so we had to turn them down. But no, to be serious, I mean, yeah, it's funny that, okay, it's great that they're finally coming around. We had a lot of great talks on that topic, probably 3 or 4 different talks on the collateralized Bitcoin side of things. Specifically, got to give a shout out to 2 young college students came from the University of Wyoming. Wyatt brought them out, and they presented on a research paper that they had, I guess they just released, they written this year, about how Bitcoin is just better collateral than any other asset. So yeah, I'm glad to see everyone's jumping on the bandwagon now. So it's good.
One of the things that I think is kind of the downstream side effect of an announcement like this is increasing Bitcoin scarcity. I don't think Jamie Dimon necessarily knows what he's doing, letting the Trojan horse in, but by JP Morgan, with their access to liquidity, offering Bitcoin-backed loans, like you said, Wyatt, the interest rates we should expect to come down and continue to come down as the traditional financial world recognizes Bitcoin as this form of pristine collateral. And every time that there's more competition for borrowing against your Bitcoin and those interest rates come down, you're going to see more and more Bitcoiners choose to borrow against their Bitcoin rather than sell. So you're essentially, through an announcement like this, the downstream side effect is less Bitcoin supply for sale in market, more hodling, and greater scarcity. And we know that ultimately Bitcoin is a story of supply and demand. And so it's just really interesting to see these players, when they do even just dip a toe in. JP Morgan has a really big toe. And so even just dipping their toe in, you can imagine that we're going to see some amount of supply that will never come back on market, just because now if they already have a traditional banking relationship with JP Morgan and now they can post their Bitcoin as collateral, that just makes it easy enough for that particular group of hodlers. So turning to the summit here, what was kind of the gap that you all saw? Because there aren't, as far as I know, really many financial services specific conferences around Bitcoin. So I'm curious, what was the gap, and what were you hoping to kind of fill with this event?
Yeah, I would just say, why didn't I talk to too many normal advisors who are not, dialed in on what Bitcoin is, why it's different from other cryptocurrencies? And so we really just thought, why don't we have a conference that is there to educate these advisors for how they should discuss this topic with their clients? And so that was the big gap. It's just that, of course, there's a lot of Bitcoiners out there. There are some Bitcoiners who also work in financial services, but most of them at a larger institution where maybe they don't discuss the fact that they're Bitcoiners very often with their colleagues. And so we just thought, why don't we open up the conversation and introduce these advisors to the correct partners in the space, which there was a lot of great partners. It was fun for Wyatt and I to get to speak with sponsors and speak with speakers who were willing to take a chance on this event, come out and be involved and educate, I would say the next generation of forward-thinking advisors who are going to be capturing, I think, the lion's share of clients who are looking to grow their wealth, protect their wealth, be tax optimized on that side, grow their business. So yeah, that was the gap. It's just there's not enough advisors talking about Bitcoin and knowing the difference between that and other cryptocurrencies.
Yeah, and it's kind of wild when you think about the fact that it's been the best performing asset over the last 16 years. You would think they would almost have a fiduciary duty to be involved in the space at this point. But Wyatt, I think you were going to add something to that. And if you could also maybe tell us a little bit about what is the space in Denver?
Yeah, absolutely. And this is something I harp on, with my peers, beside wealth management firm, brand myself as a Bitcoin focused, financial advisor. So it was great to get some normies there that are interested in learning more about Bitcoin. Just still early, right? The classic Bitcoin trope, but specifically now that more professional services folks and firms are embracing Bitcoin. One of the things that Jordan and I really wanted to do is, by bringing everybody together, is really kind of instill the values, ethos, and principles of Bitcoin, into all of our, respective industries, and understanding the responsibilities we all have at, building in this industry, together, and holding ourselves accountable. And, we're really hoping that by companies like, River and Unchained and Bitcoin Well, like providing like a good example of how to do business within Bitcoin, we really kind of end up like self-regulating and, doing things the right way to best service our clients. So, our clients don't suffer and, there's no unnecessary, regulation that comes from like a top-down manner just because everybody's taken it upon themselves to do business in Bitcoin the Bitcoin way, the right way. We took a great step in that direction. I think this is something we're going to have to continuously, work to do. But, exciting nonetheless. To your point, Chase, I thought the space was an awesome venue, for this event. The space is a physical Bitcoin citadel, very similar to like Bitcoin Park or Presidio, a little different. Whereas we're a nonprofit community, run and operated organization, so members chip in where they fit in, and you can kind of think of it as social club meets event space meets trade organization meets co-working. By being Bitcoin focused, everybody always gets a kick out of joining or visiting because we got a bunch of Bitcoin art on the wall. Everybody there is interested in only talking about Bitcoin. To Jordan's point, we try to be very serious about that, and we're not interested in crypto. This is for professionals seriously looking to grow their firm around Bitcoin. It's very intimate venue. We do kind of cap out about 150, which we were fortunate to sell out. We were stoked to do so in our first year, but it really gives people the opportunity to, and we try to be intentional about this with our programming and agenda, to just giving people ample time to network and actually talk to each other. The content was great, but it's really those face-to-face conversations. There's nothing more energetic than being in a room full of Bitcoiners, but that's where a lot of the magic happens. I think the space really showed and performed well.
And I bet you have had many experiences similar to me where you're speaking to traditional financial advisors and they think that the Bitcoin community is one thing, but then they maybe come out to an event like this and they realize, oh, wow, these are serious people. They've really thought through not just Bitcoin, the asset class, but all of the root problems at the base of our modern fiat-based system. These people are actual founders, operators, CPAs, financial advisors. What do you think were maybe some of the takeaways that normie TradFi advisor that was at the event would have left with?
Yeah, I would say probably just better understanding like the nuance around, operating in the Bitcoin industry. Obviously when it comes to, advising and giving financial advice on, different assets, Bitcoin has some unique characteristics, specifically around custody. We had some great panels on, inheritance planning and how to be diligent to make sure, that Bitcoin gets to the next generation or the causes, close to your heart. I personally learned, a lot from that panel. It was one of my, favorites. But then, also too, just kind of, I think, broadening their horizons on, what's going on in the Bitcoin financial services industry, because there's a lot more than you can advise clients on than just, buy and hold Bitcoin. We had different Bitcoin collateralized lenders there. We had different service providers and, the folks that are providing home equity line of credit or, life insurance fully denominated in Bitcoin. So I think opening their eyes to the different products that are out there, they're, not new products, like I mentioned earlier, they're just getting applied to Bitcoin. And so just helping them, better understand that this is a growing and exciting field to be in, and that there's a lot of different dynamics and products out there.
Yeah, Jordan.
Yeah, I was going to just add that you could definitely feel, the winds have changed politically for us as well. And so I think a lot of folks who were maybe, a little bit worried about, well, if I get into this space, what does that look like? I want to wait and see how all the different government agencies react. I think you could kind of sense that in the air as well. Of like, we have graduated beyond this fringe thing, and financial advisors, large institutions are essentially given the green light to whatever degree that they're comfortable, but at least it's not the rat poison squared kind of narrative. We're beyond that. And so a lot of advisors are opening up their eyes. And so, and even bankers, I mean, there's a young guy from California who's a banker and said, kind of a closeted Bitcoiner in his professional life, and was just very encouraged to see that there were so many other professionals that are taking it very seriously and trying to see what role that they serve within the Bitcoin space, as well as how can they use it to grow their business or start a new business potentially in the future. So very exciting. There's just a lot of things to be thrilled about walking away from that event.
Yeah, and you have to imagine that the JP Morgans of the world are not getting involved for magnanimous reasons. It's because the number go up technology really does have a way of aligning individual and organizations' selfish interest for number go up, and that it was just a matter of time before we attracted the other traditional advisors into the space. So how much is that something that you feel like you can talk about at an event like this, where it's like, hey, traditional advisor, you stand to make a lot of money in this space. It's a growing industry. The Bitcoiners themselves are going to be, you know, the new millionaires, billionaires, and potentially trillionaires over the next few decades. You should really get in, make a name for yourselves now, versus just trying to educate and maybe talk about the principles of sound money and why Bitcoin is important for, you know, freedom of speech, uncensorable wealth, and those kinds of maybe more holistic value props.
Yeah, I think it's a little bit of both, and kind of build on what I was talking about earlier, like some of our main motivation and goals on stewarding the industry in the proper way is, I would at least personally really like for us to stay true to our roots, and we got to give a tip of the cap to the cypherpunks, and even now that the suits are here, it's like we certainly don't want to disgrace like the work they've done and the sacrifice of our predecessors to do things the right way. And so when I'm having these conversations with my specific industry like wealth management, I think a lot of advisors are hesitant to bring Bitcoin onto their practice because it challenges their business model, which is largely AUM. And, it's fairly easy for me to just throw, an ETF into a traditional capital markets portfolio and charge 1% on that. I don't do that at my practice. We partner with Unchained to help with, sound custody solutions, because we're not just in Bitcoin for price exposure. We're in it for all the things you mentioned, Chase, to be unsensible, to be in full control of our wealth. And I think that's very intimidating to a lot of the wealth management industry. So I just try to preface them where it's like, yes, if you are interested in serving a larger, growing, wealthy client base, you should do that, but you have to do it like the right way. And that's not just to make a quick buck off these people. You really have to embrace the uniqueness of the assets. And obviously, like I always reference that Myers-Briggs graph that's been floating around Twitter of like the Bitcoin mentality. Like if you come with a traditional mindset, like Bitcoiners are going to smell that, from a mile away, and they'll choose not to work with you. So if you are going to, build a new business or adopt Bitcoin into your practice, I would very, much encourage people to get, tuned in with the community and service what they want. Because I guarantee you they don't want, to be charged 1% on holding an ETF. They want guidance on how to, steward spot bearer asset Bitcoin for themselves and the future generations.
Yeah, and I imagine when you're sitting in your wealth management role, there's kind of a tendency to lean on diversification for diversification's sake. But many of us in the Bitcoin community have, I guess you would say, leaned into the diversification of the asset class Bitcoin itself and all of the diversified, decentralized aspects of that. And many of us have kind of a disproportionate amount of our wealth, some of us 100% or more in this asset. So Wyatt, I'm curious, what hangups you see when you're having those conversations with those folks, because you're basically saying in their eyes, they're saying, okay, maybe I'll allocate a small percentage of this, 2 to 5%. But wait, you're telling me I have to spend a disproportionate amount of time to learn this new technology for what is only going to be 2 to 5% of my portfolio because I'm not willing to go past that right now? How do you kind of address that?
Yeah, it's a great question, and thank you for the opportunity to answer it. Yeah, I do kind of joke, like the majority of my clients are Bitcoiners, and they think they're diversified because they have 70% Bitcoin and 30% MicroStrategy. And so it really does come down to the individual, and as a fiduciary, like I have a lot of flexibility on how I can service them and their individual needs and wants. So I don't necessarily force them to rebalance. We work with what they're comfortable with, and like poke holes if they have a particular weakness, and we address that and identify like the trade-offs of certain different position sizing. So if a client comes to me, they have a majority Bitcoin exposure, it's kind of a different conversation. Usually they're well informed and about the asset class and the technology. And to Jordan's point earlier, then we're really just kind of helping them prepare for the future or tap into some of these new products and strategies to either utilize their existing stack to a greater capability or acquire additional Bitcoin. I kind of call this diversifying within Bitcoin. In the early stages of starting a private credit fund, where we're going to be raising dollars in, dollars out, but we're going to be a liquidity provider for Bitcoin loan servicers and originators. In that instance, if a client has a fixed income need, that can serve that need, but the underlying asset is Bitcoin. We're not just putting them in sovereign debt for the sake of getting fixed income. Fixed income, we want exposure to like the hardest asset known to man. And I would kind of throw like the meanwhile as a Bitcoin denominated life insurance product. And so it's like how we diversify within Bitcoin depending on what stage of our life we're in and how much Bitcoin we hold, where we want to go, etc. For new coiners, it's a little bit more of a nuanced conversation. I did create this menu to try to meet people where they're at. I think that's really important. And Bitcoiners, we can kind of get a little carried away sometimes when we have fun talking about Bitcoin. And so it's like, are you interested in technology? Are you interested in economics? Are you interested in sticking it to the state? Like whatever it may be. And then it kind of becomes more of a position building exercise. And we generally have them start small and DCA and then build conviction in that position, and then Bitcoin generally does the rest from there.
Jordan, now next one's for you, just to make sure that we're getting you in here as well. So we have in the United States kind of over financialized everything. That's in many ways you could say that our main export is kind of the over financialization of everything. And here comes Bitcoin. It's infiltrating all of these various assets and financial instruments, securities, bond-like instruments, etc. And Wyatt just mentioned life insurance, home equity line of credit. We're talking about Bitcoin-backed lending. I think to some degree, we understand that Bitcoin will have a role to play in every existing instrument, and that we will also see new instruments, things like what Strategy is pioneering and others. But at the event, I'm curious, what new instrument or financial service maybe popped up into the discussion that took you guys by surprise?
Well, it might not be new for anyone who's been paying close attention to Bitcoin over the past, 6 to 8 months. But if you have not listened to Andrew Hones and the ideas that he's been espousing over the course of the last, I guess, a year at this point, is at least when I first heard about him on CNBC, the Bitcoin backed loans where the lender gives a more favorable interest rate on the front end and takes a portion of the loan proceeds and puts it into Bitcoin. And then basically both sides of that transaction share in the upside of Bitcoin over a longer than 4-year time horizon. I think that is an idea that is just going to explode, be it whatever type of loan that you're taking out, whether it's to purchase a home or to purchase a business or to, manage a farm, whatever it is. I think that I'll say, I'm very thrilled that Andrew was gracious enough to come out and speak at our event because I see what he's putting out there. And even with Treasury, trying to help the US government solve their own debt problem in the interim by lowering the deficit each year, but also over a long period of time, growing the asset side of the balance sheet quicker than the liability side is growing. So to me, it's funny, we had to always remind ourselves, and this happened a few times during the event, where it's like you're talking to someone and they're like, I've never heard of that. And in your head, you're like, I've heard of that a bunch, but I guess maybe, I have to meet everyone, like Wyatt was saying, meet everyone where they're at. And I think that's only going to continue to happen as there's more stories that pop up, like this JP Morgan Chase story. But then it's important also to remind ourselves what is exactly happening on the back end. Something that came to mind as you all were we're talking, I assume JP Morgan Chase is not taking that Bitcoin and putting it into a multi-institutional, multi-sig vaults, right? Or using Unchained as a partner on that, whatever they choose to do. If I had to guess, they're going to use Coinbase as their custodian. And so that's important for advisors to understand the risk of all of this continuing to be pushed onto Coinbase or whatever the structure of the custody model is. And I think that was a big heart behind our event is, we actually, I think our first panel was the Bitcoin custody, and we had On-Ramp and Unchained represented up on stage there to just discuss what does that look like. You have this asset that you can take self-custody of, be it on your personal balance sheet or business balance sheet. Now, how do you actually do that? So yeah, there's a bunch there. But Andrew Holmes, if you take anything away from it, I would say go look into what he's been speaking about.
Yeah, I caught Andrew Hones at the Bitcoin Park, Bitcoin Treasury and Custody Summit. And then I'm glad to hear that OnRamp was present at your all event to espouse the benefits of multi-institution custody, because OnRamp is our sister company here at Acropolis. And that's what we recommend for all of our business clients. Wyatt, I'm curious, what financial services do you think are most ripe for disruption through this kind of infiltration of Bitcoin? Because you could argue that all you have to do is look at the financial landscape today and say, what instruments, what areas of the market have the biggest gap between real rates against, true inflation, not necessarily CPI, but true inflation versus their actual rate of return. That gap, wherever somebody is underwater there, the more they're underwater, the more that those vehicles are ripe for disruption.
Yeah, that's a great question. Obviously, like I mentioned, very bullish on the Bitcoin back lending. I think that's going to do phenomenal things for the underlying plumbing of the industry. I'm very curious. I know Meanwhile is really kind of pioneering a Bitcoin whole life insurance policy. I'm usually not a big fan of insurance in general, let alone life insurance. Technically, licensed to sell it, but generally, if we do have a need, like outsource it, just because I don't want to get involved with that. I just think it's kind of a slimy industry, but they're really doing something very unique, and I think very much the right way. Their whole company is denominated in Bitcoin, and I think that unlocks a lot of capabilities. Kind of a similar vein to, I'm very excited about these home equity line of credit products that Horizon and Orange Bridge is pioneering, just because I don't hate real estate. I'm not particularly bullish on it, but I just think it's pretty much like the most scarce asset the average Joe could get their hands on. That's why we see a majority of at least Americans' individual wealth in their primary home. And so a lot of folks do have idle home equity because we have this insane monetary premium on top of the utility value. So if we can use those new instruments to tap into that idle equity and use it to purchase Bitcoin, that could be potential generational stacking opportunity for somebody looking to utilize a strategy like that. And I think both those companies are Bitcoin native, so they have sound custody solutions. They have a keen understanding on how to help their clients custody that asset, but then also make sure they have opportunity to keep a majority of that Bitcoin. Obviously, they'll both participate in the upside, but they have some very favorable debt servicing terms. A lot of Bitcoiners tend to be a little strapped on cash flow because they don't like dollars. They like Bitcoin. So when it comes to just being strategic on how they're setting up that debt structure to begin with, and how that debt structure gets serviced at the time of a home sale or Bitcoin sale. And so I know, just particularly, I've had a lot of inbound folks asking about these products. So I'm excited there's entrepreneurs taking on this challenge.
Yeah, and you mentioned kind of home prices, which we could argue are inflated. Maybe they're rightfully inflated or not, but British Huddle said something really interesting about that on a recent interview that he had on. And he basically said that the assets that you see rise to become the greatest asset classes, the most valuable asset classes by market cap, are the ones that have the best credit worthiness. And now we're finally seeing this creditworthiness come into Bitcoin. This has been the thread throughout this conversation, going back to the JP Morgan Bitcoin-backed loans. When you can borrow against your home, you can get that liquidity that allows you to not have to sell that home, not have to put it back on market, and sit on it for a longer period of time as an appreciating asset. And if those rates that you can borrow against the home at are lower than the appreciation rate of the property itself, then that's on paper always a good trade. And now we're finally seeing that dynamic enter Bitcoin with proper creditworthiness and a unique type of creditworthiness where in many cases the Bitcoin itself is the creditworthiness. You don't even have to look at the creditworthiness of the individual. So very exciting. It's an area that we all three seem very bullish on. But one thing I wanted to ask Wyatt in particular, and we'll see, Jordan, maybe you'll have something to add to this as well, but at Acropolis, we are in the AUM business. We are custodying assets on behalf of business clients, enterprise balance sheets, and we are able to make less on clients and our services today because we have this idea that we're betting on the fact that Bitcoin will 10x over the next few years. And so basically, we can price lower to build those relationships, collect that AUM, because we understand that Bitcoin will grow and appreciate into kind of the revenue model that we need it to be at for a more sustainable business. That is something that I think is really unique to anybody providing financial services around Bitcoin right now, because the folks that are doing so kind of have an understanding that they can undercut the market in terms of their services to build those relationships, collect that AUM or collect that today revenue stream, because they understand that the revenue stream, as long as they've attached their revenue model to Bitcoin's price appreciation, which is almost hard not to do, that you're going to benefit from Bitcoin's price appreciation over the next decade, and that it's going to kind of make right whatever your revenue model is out of the gate. So I'm curious if you're seeing some of that in terms of kind of the culture change between Bitcoin financial services and traditional financial services, where they need to justify every hour they spend with a client today.
Yeah, that's really interesting and a little bit of nuance. I'll try my best to kind of explain like the landscape I'm seeing. I definitely am very appreciative of the custody companies like OnRamp and Unchained and Casa. I don't think it's an easy business, but it certainly makes my job and folks in my seat a lot easier. So I'm appreciative of you guys for taking on that challenge. Understanding what I mainly have a gripe with of like wealth managers charging AUM on Bitcoin is they're really not in the custody business. Like they're in the advisory business, right? And so, I'm not analyzing this cryptocurrency over that cryptocurrency. I'm telling you to buy and hold Bitcoin. So how can I justify an AUM fee on that advice? And that is where most RIAs make their nut. What I think is most appropriate, and Unchained, we 3 tiers of custody solutions we can offer with their partnerships. So, client can hold 2 keys, I can hold a key in the quorum, or we can enroll them in multi-institutional, multi-sig. And again, on the wealth management side, I understand the custody business is a little different. Like it's hard for me to justify charging an AUM fee on holding a key in the quorum, because from my perspective, that's kind of signaling to my clients or the marketplace where as that Bitcoin appreciates, my responsibility for being a key holder becomes greater. Whereas I think it's as great as it is today as it is in the future. And we want to make sure, that's reflected in a flat fee, because we're not even that your Bitcoin is worth less in dollar amounts. And, we're optimistic it's going to be more in dollar amounts. We're taking that same care that we would in the future, like today. Understanding that you guys have kind of different responsibilities on the custody side of things. And ultimately, you have to price your business accordingly to being competitive in the marketplace and best service your clients as you see fit. And then, particularly too, at least how it works in like the advisory AUM game is a lot of times you're the custodian for traditional stocks or whatever. Like they're actually selling some of that your holdings to pay like your advisory fee, and this just kind of happens like silently in the background. It's like, well, we want to hold on to our Bitcoin. Like we don't want to sell a Bitcoin just for the financial advice. And so that's another reason why I particularly don't like AUM pricing in the advisory space. Understanding you guys have different responsibilities and challenges in the custody space.
Yeah, I think that's a fair critique, honestly. And we're still figuring out what all the best revenue models are here. So I think that's a very fair critique, actually. A couple more questions related to the summit itself. So obviously the summit was a great success. I've heard a lot about it from prospects, existing clients, folks on our team and advisors that went to the event, the on-ramp team, etc. I'm curious, what did you learn from this event to not do next year, assuming you're going to do it again next year?
Yeah, I can start on that. I would say, Wyatt and I we're go-getter guys, right? We go to an event, we're going sun up to sundown, the whole gambit. Apparently there was a few people who were like, maybe Friday went a little long, maybe Saturday went a little long. So yeah, I think that was probably the only constructive feedback, at least that I've gotten so far. Also, my wife said that, so I was like, all right, I should probably take that into account. We, you know, so I would say we probably will structure it next year where there are side events, be it a dinner, be it, we actually did a bourbon and wine tasting, not at the same, well, you didn't get to partake in both. You had to pick one or the other. It didn't get too crazy. So, there's just a lot of things like Friday, we did a dinner, we did that tasting, and then of course people want to get together after that. I think generally I go to events and there are events like I was just at the on-ramp a side event at NABS that was kind of off-site. It was sponsored by on-ramp. And I think that's probably a model that we'll adopt where there are additional networking events that might be ticketed separately to keep the party going. You don't have to feel like you're missing out if you're just a general attendee that doesn't want to go sun up to sundown. That was probably one of the pieces that I know I heard. I don't know if Wyatt, did you have anything else that you heard, Wyatt?
Yeah, I also heard that, we're definitely doing it again next year. We had so much fun. Like, we're definitely running it back. We weren't 100% sure at times. We had the dog days of like August or September. I'm like, Jordan, I'm like, why the hell are we doing this? I was like, oh, this is a lot of work, but super rewarding. And we got enough positive, feedback. It's like, we're definitely doing it again. And just, think there's a need, to specifically talk to these folks. And we want to make sure, this business and this industry is, growing in the proper direction. One of the things I think we want to experiment with too is, this kind of ideal of like, panel fatigue, it's like panels, keynotes are like, pretty cut and paste, like, content delivery, for, pretty much any, summit, you go to. So, I really like the ideas of trying to integrate in some like more working groups or like fireside chat sort of thing, something to kind of like, break that up a little bit. On the mining side of things, or there's just like a physical component, some of the hardware wallets or whatever. Like, I think that working group's a little easier. Jordan and I kind of struggled to think of that like year one. It's like, well, what would we kind of do in like the professional services space? So over the next year, we're going to kind of think of different ways to not only present content but also get people more involved with the content.
Nice. Well, I don't know if you guys have seen this meme going around lately, but I'm sure you've seen the original where it's a person poking at Bitcoin and saying, do something. And there's a reverse of it now, which is Bitcoin poking the person and saying, do something. And so when I look at what you guys have done this year, I just think of that comes to mind. And I know you guys well enough and have followed you guys well enough to know that your heart's really in the right place. And so I appreciate everything you guys are doing to bring Bitcoin to more people in the world. And go ahead and give people a place where they can go and follow your work.
So I would just say, just follow me on X, Twitter at guest_Jordan. That's probably the best place to find me, and happy to talk with you about doing your tax and accounting work. We actually are in the middle of merging tax firms with Satoshi Pacioli, tax firm based out of Nashville, out of the park there. So happy to discuss that with you. And then if you have any accounting needs and you're earning in Bitcoin, spending in dollars, also try to check out our new product, Bitmint, bitmint.co. And right now it's free. Sign up. Billing doesn't start until January. So give that a go. It's like a Bitcoin native QuickBooks solution that tracks your cost basis and taxes.
Yeah, thank you so much, Chase. That was very nice of you. And, so Jordan's a big fan of what Acropolis is doing for the industry and ecosystem as well. And tip of the cap to you and the team there. But if people are interested in my professional services, you can book a free consultation at basilic.io. If you're interested in some of my personal writings, you can find that at wyattrourke.com. The Bitcoinization of finance book is available at brainsbooks.com, and I'm most active on Twitter at Wyatt_.
Should we expect a limited 150 seats again next year? And when do we think maybe tickets would become available?
Man, forcing us right back to work. I think we do want to keep the event smaller, probably right around that 150, 175. So I would definitely bank on that. As soon as Jordan and I get back to it here, tickets should be available shortly.
Okay, great. Well, we'll share that out when those tickets do become available, and we'll try to make it. The Acropolis team should try to be there next year. So Wyatt and Jordan, thank you so much. And for listeners, go ahead and like, subscribe, and share this with a colleague or a friend, especially if they don't yet work in Bitcoin financial services, but they do work in traditional financial services. This is a great episode. These are two gentlemen that are great to connect with and learn from. So thanks again for everyone that's listening. And Wyatt and Jordan, thanks for being here.
Thanks, Chase.
Thanks for listening to this week's episode of the show. Don't forget to like, follow, subscribe, or leave a rating on your preferred podcast platform. One of the missions of Acropolis is to educate the public on the transformational benefits of Bitcoin and Bitcoin treasuries for companies. The more engagement we get, the more efficiently we can spread this message. Lastly, quick reminder that New Foundations is for informational and entertainment purposes only, and nothing should be construed as investment, financial, or legal advice. Companies interested in Acropolis can go to acropolistreasury.com to get in touch with our team.